Facebook, we are live. Now, before we go any further, what I want to know is we're trying a new little sound system today. So I just want to see if this is working and you can hear me. So hopefully the sound is working all right. You can hear me clearly. I'm going to start the video. If you can't hear me, let me know. So just let me know if we've got sound. Just comment somewhere in a little comment box. Just let me know if we've got sound all right. Peter's here. Peter, just let me know if you can hear me all right. Because I'm using a little mic. There's a few of you coming in now. Just somebody somewhere, give me a like or give me a hello. Just give me something to let me know you can hear me okay. Sound coming all right? Does it sound okay? If you can message, just let me know, because we're trying a new little mic system. Because it's quite echoey in my trading room. So we're trying a little new sound system. Hopefully that is all good. Right, I'll get cracking. We'll go with it anyway, see where we are at the end of it. So what I want to talk about today, I want to talk about a neat little trick that you can use to improve your trading results, improve your trading process. And it's not something that is exclusive to trading, all right? So this is something that you can use in any area whatsoever. So this is something that is interesting because it's come up. Now, the reason I'm bringing this up today is we were discussing this in the Sound is Perfect. Brilliant, that's great, that's what I want to hear. So we were using this in the trading room and discussing this in the trading room last night. And it's very appropriate for this time of year, because those of you that are listening that are in our trading room, you'll know that this time of year is approaching what I call review time. So we've been running our swing trading signals. It'll actually be on the 19th of September. We'll have been running those signals for 7 years. So we started in September in 2013. So what I tend to do with swing trading is I will review my swing trades critically once a year. So I always say, depending on the style of trading, so with our position-based strategy, I'll probably review those trades once every 3 years, but with our swing trading strategies, I'll review them once a year. Now I'm qualifying and checking and looking at the data on a quarterly basis, even on a monthly basis, but I won't actually make a big change until we get to the end of that year. So the year we run is basically mid-September. So what I'll do is for the last 2 weeks of September, I will go through all of the data for all 6 strategies and see if there's anything that we can optimize, see if there's anything we can change. Do we need to change 1 or 2 of the strategies, or do we need to optimize 3 or 4 of them? Is there anything we can do? Can we run trades for longer? Can we move stops quicker? All of these things, 1,000,001 different variables, we go into at that point. So today's subject, as I've said, is a neat little trick to help you improve your trading results, your consistency, and this is it. Basically, stop stopping. And this was the subject that we were talking about last night. We obviously got into a lot more detail than I can go here, but the key thing here is stop stopping. And I learned this from my own coach, and interestingly enough, we're coming out of lockdown here in the UK. Things are getting quote unquote back to normal. People are doing more normal things. And one of the things that I'm seeing on the news and I'm seeing in reports is people have put on a lot of weight over the last 6-7 weeks. So 6-7 months almost for some people. Now, one of the things I decided when we went into lockdown was that I was going to not only maintain my shape and my health and my fitness, I was only actually going to get fitter. And interestingly enough, my trainer said, one of the things that you've done really well, Ali, is you have just kept going. It's not been perfect, but you've just kept going. He says, too many people I work with stop and start. And I see this with some of our members. So we get free members come and join us. They'll come to a webinar and I'll ask them how they're getting on, and they'll say, well, I haven't really done anything for the last 3 months. So the challenge is trading is a skill that if you approach it consistently and it becomes part of your daily, weekly, and monthly routine, regardless of whether you're a day or a swing trader, if you keep that routine going, you will get better and better and better at it, especially if you're getting feedback from somebody like myself, or you're getting feedback from somebody who actually can help you move forward. The challenge is too many people stop So my message to you today is to stop stopping, because the challenge is a lot of traders will hit a losing run and they'll stop, or they will get busy in another area of their life and they'll stop. And I've often thought, what is the reason for this? Why do so many traders start and stop, start and stop? And I think the two primary ones are when they hit a losing run, they don't know what to do, they don't have anyone they can get feedback from, so they stop. And they don't necessarily intentionally at that point think, right, I'm going to stop. They just stop for a bit, and then other things become more important, or other things get in their way, or other obligations come along, and there's a little bit of fear, a little bit of uncertainty, other obligations that take precedent, and as a result, they stop. And the other thing I think is that trading is almost a non-obligatory pursuit. You know, the market's not going to ring you up and say, where are you? You need to place trades. So it's very, very self-motivating to do. You need a lot of self-motivation to be able to do it. And the challenge is not every single day you're going to feel motivated. Even though I've been doing this 20 years, sometimes I'll sit down in front of my screens and I don't want to go through 40 markets to trawl through 40 markets to look for possible trades, because my energy might be low, I might be distracted doing something else. So it's really, really important to be aware of the things that if you have stopped in the past, and you do stop, start, stop, start, stop, start, that is going to, one, impact your progress, but two, it's going to impact the approach that you have. Because if you are consistent, and this is what I was talking about in the room, if I'm ruthlessly consistent with my trading day in, day out, over the period of a year, when it comes to the point that I'm going to then review what I'm doing, I'm reviewing what I'm doing with a consistent set of results. So I can look at the performance of the trades over a period of a year. I can look at my own performance within that and compare the two. And then I can take this year, the current year, compare it to the last year. And then of the last 7 years of live signals that we've been sending out, I can compare this year to 2 years ago. I compare this year to 4 years ago. I can take the best performing period during this year and compare it to the best performing period of last year. I can take the worst performing period of this year and compare it to the worst performing period for the last year before that. I can take the last 6 years average best performing period and compare it to this year's 1 year best performing period. I can take the average of the last 6 years worst performing period and compare it to this year. And what that allows me to do is get perspective on my performance. It can show me and give me clues on where I can improve. But what I'm not doing is I'm not finishing what I'm doing and stopping trading all of these strategies here and just stopping for a bit, or dropping something and starting something completely new. What I'm looking to do is optimize what I'm already doing. So the challenge for a lot of traders is they come in, they learn something, they start trading it, they deem that it doesn't work because they've traded something for 2 or 3 weeks and they've expected a year's average return to be reflected in two weeks or a month's worth of results. So they stop. Now, I don't know if anyone listening to this can relate to that idea or that concept where you start something and stop. You start something and stop. And often I see this with students who want to back test, is they'll do a weekend or they'll spend a couple of hours back testing and then they won't do anything for 3 weeks. Whereas the most successful traders are consistent in each of the key areas. They're consistent in their daily analysis. They're consistent in keeping their data up to date. They're consistent in testing. They're consistent in their strategy approach. And they're consistent in when they refine what they're doing. So my message to you today is, if you want to be successful, whether it's trading or anything, is stop stopping. And if you're in a situation where you're like, but I don't know where to start, I haven't even started yet, the key thing is to get in touch with us. So remember, if you stop and you miss 6 months, that could be the best performing 6 months for that particular strategy. So you might, when you start trading a strategy and you see it and go, well, it averages 50% a year and it has done for the last 6 years. You start and you hit a 5 or a 10% drawdown that month. The challenge there is the risk is you stop, but you stop right at the point that statistically that strategy is then due to have a winning run. So what happens is then you miss that good performing period, you get pissed off, you get angry, you think, right, I'm going to come back, and you start again. And guess what? You start at the next down period. So what could have ended up being a profitable 9 months, 12 months, 18 months is actually an unprofitable bit because you happen to catch the strategy on the downturn. So the important thing is if you stop stopping and you're willing to understand that strategies have good periods and bad periods, then you're able to catch it. Because a lot of people say, oh, it seems like you're lucky, Ali. You always catch the big move or you always catch the winning run. Well, the reason why is I'm always there. And one of the sayings that I love is when it comes to luck are like buses. They come along regularly, but you've got to have the fare to get on. And I really like that because it reminds me that the luckiest traders, or the traders that seem to catch all the opportunities, are not the ones that catch the individual opportunities. They're the ones that are there day in, day out, grinding out their normal strategy, their normal setup. And then when the opportunity presents themselves, they're able to catch it. Or in the same breath, they're not in and out, and feeling like they're always on the wrong side of the market. So good. So that's my message today. Stop stopping. And if you need help, get in touch with us. Remember, we have free webinars that we'll be running on a regular basis. We've got our 28-day kickstart. The next one that we've got spaces for is actually now next year. So if you need help, you want some help getting consistent, get in touch. Tomorrow I will be doing a live market commentary. So I'm going to go run through all the different markets, go through that. And I'll be back in touch again with you very soon.